Back with you on a Friday. I'm Marlon Boulding with you, and I want to welcome aboard Todd Horwitz of BubbaTrading.com. He's located in Chicago. And Todd, we noticed that the markets, after very bullish news this morning, turned south on the corn market, and some folks were kind of concerned at that. And you and I were talking during the break here. In fact, let's bring up the corn quotes here to support what we're talking about. On the corn board with our quotes provided by bar chart here, I want to focus on that July contract. It had a high last night of 804. Right now we're at 788 per bushel, and that's down 7.25 cents. But as I was looking at a July daily bar chart here, Todd, you know, it has been running up so long and so steadily for, gosh, what's it been? About 6 months or so, the way it seems. The 20-day moving average is all the way down to 759 or so. So theoretically, we could drop 30 cents and not even take out any support or anything. So it looks like this market actually has a lot of elbow room, doesn't it?
Marlon, I think they're going a lot higher. This is natural selling. We've talked about it. The first support's going to be about 780, but this setup is about as bullish as it gets from a charting standpoint, from a fundamental standpoint, and there's no reason to believe. And again, we can go down. We're going to have sell-offs, okay? But I wouldn't be surprised if even by the end of the day, if they ended up higher on the day. There's a lot of buyers here, and everybody who tries to sell gets clocked because the grain markets are very strong, and we just heard the weather report. So Mother Nature is not cooperating either. That's only another reason to expect higher prices.
So you're looking at this as more of a possible buying opportunity, or buy the dips, as they say?
Absolutely. I think you buy every reasonable dip in corn or soybeans or wheat that comes down to what we would think a reasonable support level. And in corn, it's about 780. And I would definitely be stepping in and adding to my already long position because, again, this is kind of like crude oil. There really is not a top. There's some support on the way up. But bottom line is they want to go higher, and every surrounding fundamental supports the technical charts as well.
Well, and we can have some dynamics in the corn market as we go through planting time, and you always have some fears about planting delays and that sort of thing. Could be too dry, could be too wet, or what have you, but we all know that game time comes closer to pollination when we get into the heat of the summer, and anything, all bets could be off by then, right?
100%. But I mean, I don't think the geopolitical tensions are going to go away by then. I don't think the inflation is going to go away by then. I don't think the input costs are going to go away. And certainly the borrowing costs for farmers are not going down. So the inside story is that everything is creating higher costs. And if they're not going to be able to get their cost and make a profit, they're not going to plant as much. So again, I think we're going to have a food shortage, which will obviously create even a bigger need and a bigger reason for higher prices.
All right, let's go back to that corn board, and we saw where July was down about 7 cents or so. On the December new crop contract, it's down 10.75 cents at 7.28, so they're actually widening out that spread a little bit. Let's look at soybeans this morning. And again, I'll remind you, we had 1.6 million tons of corn sold overnight and 144,000 tons of soybeans overnight, but as a lot of traders say, that was all baked into the cake before the announcement ever came out. So we're seeing the other side of the reaction right now. July soybeans down 16.75 at 17.0275, and November down 15 at 15.1675. On the wheat market in Chicago, we have actually gone higher today. My goodness, they have come back about 24 cents off of their earlier low. July in Chicago is now at 10.84. That's up 7.5 cents. Isn't that interesting? That would support Todd Bubba's argument here. We have July Kansas City wheat now 11 higher at 11.54.5. It's hard to keep up with these wheat markets. Now we're within 3 cents of our high of the day. In the spring wheat trade, you have July now 10.5 higher at 11.65, only about 1.5 pennies from our high of the day. Wow. Okay, we'll come back in just a moment. We'll talk more with Todd about our livestock trade, might even touch on the cotton market when we come back. All right, we're back with you. Let's take a peek at that cotton market here as we come out of the grain segment, and it is taking a nosedive as well today. July cotton down 161 points at 136.28, but that's not the whole story. Hold the phone. We did get it all the way down to 135, and we have rebounded 128 points off of that. So it's kind of a mixed tale here. We have December new crop cotton now down 98 points at 119.20. Okay, let's check out our livestock trade. Let's go to live cattle first, and we have the June contract 60 lower at 139.30, 70 cents off of our earlier high. We're a little closer to our low than we are the high of the day. Keep in mind, we have the cattle on feed report coming out later after the close. May feeders down 65 cents at 164.20. August up $1.22 though at 177.70. Interesting. On the lean hog trade, you now have that June contract $1.52 higher at 118.70. So I want to go back to Todd Bubba Horwitz and talk about this feeder cattle market here. What is with the May-August spread today in that feeder cattle trade? Any idea?
Well, yeah, they're pushing out the time and looking for potentially lower corn prices. I mean, remember the high price of feed comes earlier because of the fear factor and the possible delivery. So that makes a difference in the formation of the trade. But again, I think that cattle itself, both fats and feeders, are really destined to what crude oil does. And if crude oil continues to run higher, unfortunately, I think cattle are going to run lower because it's going to become a budget issue for those families that it comes to a decision between eating and filling up their gas tank or trying to do both, which is why they would probably be eating pork or something else.
What about this move in the Dow today? Look at this June Dow Industrial Average Futures down 564 points at 34,137 right now. Is that giving people kind of a sour stomach, if you will, over in the livestock trade today when you see the equity markets taking a nosedive like that?
No, I don't think so, Ron. I think that would actually be more bullish because the money will be looking for a place to go. I think the equities have seen their highs, and I think we're now I think we're basically in almost recessionary times, and I think the markets have seen the tops, and I think there's going to be a lot more selling pressure to come, and I think we're going dramatically lower here. It won't happen in one day, but I think over time we will be going much lower, and in markets I'd be selling all the rallies.
Interesting stuff. Todd, thanks for your perspective today, and I hope you have a great weekend. Todd Bubba Horwitz with us. Suzanne, with that, I'll turn it back to you.